special case of married couples. So the vast majority, 70% of you is jointly assessed for taxes, and the rest of you are not. As I said, it's a very common example in Ireland that married couples or civil partners are jointly assessed for taxes. And not many of them realize what impact it has if one of them is trading. So let's go through the scenario. If you are jointly assessed for taxes with your spouse and one of you is trading as a sole trader, you will have to file a joint income tax return for both of you. So one return for both of you. It's important to remember that it is only one return for both of you. And only the assessable spouse can file the return. That's quite funny, quite untypical, and not many people know about it. What is an assessable spouse? Usually, it is the spouse nominated by you, by yourself, when you were registering to be jointly assessed for taxes. In the vast majority of cases, it's the spouse with the higher income. So it's quite easy to recognize that would be the one with the higher income. So if you are an assessable spouse and you also trade as a sole trader, it will be yourself submitting the income tax return. But in the opposite scenario, when the non-assessable spouse is trading, so for instance, the husband is the assessable spouse, the main breadwinner, and the wife has a small trading income, but she wouldn't be filing her income tax return. Her husband has to file the joint income tax return for both of them. This is a very common example, and many business owners jointly assessed for taxes make a mistake of incorrectly registering for income tax and wrongly filing their tax returns. Also, a very important thing to remember is that once you decide to change your basis of tax assessment, for instance, from joint assessment to single assessment, or the other way around, you have to declare this to the revenue. So you have to submit a declaration informing them that you are changing from being jointly assessed to separately assessed. It's not enough if you just choose in your income tax return, okay, this year I'm filing a separate return from my husband. You can't do that. They will not accept it. First, you need to declare to them that you want to be separately assessed or jointly assessed, depends on the situation. And you have to do that the year before you file the return. So for instance, for year 2019, it's too late. If you are about to file your income tax return for year 2019, and you change your mind, you want to be separately assessed for taxes, separately from your spouse, you can do that. It's too late. You have to file a joint income tax return and declare as soon as possible to the revenue that you want to be separately assessed for taxes. And next year, you will be able to file a separate return.